Greetings, everyone, and welcome to GPA Trading Services Live Market Review. My name is Gary R. Albrecht. I'm the founder and CEO of GPA Trading Services. I'm also the creator of the MPA Market Price Anticipator version 5.0 software. What's unique about our service and our market reviews? I'm the creator of the software. I'm also the educator and the instructor. Brief bio. I've been a professional trader for 25 plus years. I'm a technical analysis expert. I'm the technical analysis guru to the gurus. I'm the creator of a one-of-a-kind trading software. I'm the founder of GPA Trading Services, which has been over 14 years now. Educated thousands of students around the world. We conduct live events, speaking engagements, platinum programs. We offer one-on-one coaching and mentorships. Today's topic and the reason you're here is for comprehensive market review. This is something you're going to find out if you don't already know. Trading smarter, not harder equals our market price anticipator software. Brief disclaimer, this is your typical disclaimer, but I will point out a couple of highlighted key points. Trading is not suitable for all people. Some markets are leveraged and therefore it is possible to lose money deposited for a position. A person should only use funds they can afford to lose that fits within their financial plan as developed by a qualified financial planner. What we always say before all of our live classes is you should never risk more than 2% of your entire account balance on any one given trade. For options traders, never risk more than 5% of your entire account balance on any one given options trade. And you should always adhere to strict and proper money management. All information provided in this presentation is for educational purposes only and should not be taken as investment advice, nor as recommendation or endorsement to buy or sell any specific investment, and you are trading at your own risk. Just a couple of things we like to cover is how do you can anticipate market conditions and where the markets are headed in advance. You need to understand support and resistance. This is very common sense as well. Trend direction. Utilizing multiple time frames is the key, and the key is to align those time frames and understanding how the lower time frames cycle within the larger time frames, as we refer to it as our hook and cross line of progression. Now, let's go to the charts. I'm going to start off with the dollar index real briefly. I always start off with the dollar index and market reviews because it gives a big picture. And if you know where the dollar index is headed, then you can anticipate where a lot of asset classes are headed. And this goes back a long time ago when we were anticipating a move up to 115, 120. If you were part of our service, I gave this target out years in advance. Well, that's over, and now we're in a process of destination 2. The expected move is for this dollar index to work its way down towards 80. If you're using Elliott wave or you're using the Fibonacci's, we got a bottom back in 2007. 15 years later, I'll use my big cursor over here. 15 years later, we went up to that target. Now, since 2022 top and reversal, I called it then, and now I'm calling years in advance this target down here about 79.98/80, which again is a 78.6% retracement. We've been 2 years in this move lower. We still have a few more years to get down here. I like this subliminal message, Frank, that we saw this move. It's a bad tick, obviously, but I call it a subliminal message that this is ticking way down. This is our destination. Why is that important? If you're a Forex trader, we have a target for you on the euro dollar. We'll go over the trade management system and some of the tools, but this is about the market review first. And from the inverse of the dollar index and the euro dollar, my projected target for the euro is to go up between 135 and 146, which is a 61 and a 78.6 retracement. And my focus target is between 140 and 145. Bottom line, if you're a euro trader, I called this bottom when I called the top of the dollar index. And I mentioned to our members, it's time to go long the euro dollar. It is going to go up thousands of pips, and it's going to take several years to get up here. Here we are 2 years in it, and the euro's already bounced a few thousand pips, and we have certainly a lot more meat on this bone to go higher. The software pegged the low with this monthly, and we can see that we're still got a long way to go. I anticipate it's going to look very similar to the software. It's going to rally into overbought, start slingshotting higher, moving higher upwards as we make our way up here. Again, it is a few years out, but if you had been in this service, you would be up thousands of pips and looking for thousands more to come. As far as the pound dollar, it's the same. I got my trade management system ready to enter a long trade, but I'm expecting a little bit deeper retracement before it's over. And the same rule, high to low, we're looking at a 50/61.8% retracement. My target for this move over the next few years is to go up around 157, up to as high as 170. My focus target is between 165 and 170. So again, we're right now at 130. So that's upwards of 3,500 to 4,000 pips to get up here, still to come. And again, we called the bottom and we're already up a few thousand pips. And I do expect this will continue to go higher. So this is why we spend some time on the dollar index, if correct, where we end up coming down to this 80 target, which asked our students years ago when I mentioned 115 to 120, they were like, there's no way. I didn't know it was going to take 15 years. I knew it would take years, but not 15. But these type 2 retracements typically are deeper. That's why we're looking for 786 retracement. And that will take a few more years to get down here. But this is a given. If we get here, no ifs, no buts, no ands, no exception. If the dollar makes it down to my target, you can rest assured this target will be met. And for the pound, that this target will be met, which again is thousands of pips still to come. And we did call that bottom. Maybe you don't trade Forex, maybe you trade some other thing, but you can see why I'm expecting, let me go back here for a just brief moment. This dollar is expected to go higher, and I called this bounce on the daily chart, but look at the weekly. We got a couple of things we look at, a PAI, a price action indicator, and a trend momentum. This gives us the amount of money flowing into the markets, the direction of the traders and money reaching the market, and we call that our price action indicator based on price action, obviously, and then the trend momentums. So as we're starting this PAI hook, this is what's unique about our market abilities to anticipate using a lot of tools. You see Ichimoku cloud, whether you use that or not. We use Elliott wave, we use Fibonacci retracements and extensions, because it's all about support and resistance in the trend. And you can notice we got what we call a PAI hook on this. It's already hooking up. That means this daily has already been anointed to likely make the full cycle. Even as we had this nice little pullback the other day, we call this a slingshot. We won't get into all the terms. You'll learn it when you join. But this will be this likelihood that this cycle, and I'll use my handy arrows here, that this is going to cycle up and this is going to cycle up. And while we're doing this little, what we call engage, disengage, a cycle includes all three lines, red, blue, and green. And notice where green is, it's right there. It's not finished cycling. So what does that tell us? We're likely going to get this to go up higher. If you do use Ichimoku cloud, we call this the hook and cross Ichimoku cloud, because every time we get a hook and a cross and we know it's going to cycle, it tends to get pulled into the cloud area. This is expected to continue its grind toward the cloud area as this cycles. Why do I know that in advance with a high probability? Is because of the status of the weekly chart. The weekly already has a hook and return. Now, what we call the hook and the cross is the PAI hook and a trend momentum cross when this green crosses above the red. Notice it's pinched. It's not officially crossed, but I'm already anticipating in advance that this daily will finish the cycle. This dollar index is going to grind its way further, but we even go further than what we attempt to believe the software is going to do. You use support and resistance. If we break this swing point low here, we're going to go lower. Well, remember, that's because we know we're going to go lower in the years to come. We're definitely in a downtrend, but we're in a short-term corrective uptrend. That's where you look at the different time frames. So whether you're a day trader, position trader, investment trader, it doesn't matter. I don't know your personality. I can learn based on your questions and things what you're thinking about, but I have no idea if you're a scalper, a day trader, et cetera. So you use different time frames, but it's important you understand the big picture. So most of you trade the S&P, Dow, NASDAQ, Russell. Well, looking at the S&P, I pegged this bottom, I pegged this big retracement. All that's here and there. If you were in the class, it would have been great for you. You made a lot of pips and a lot of points, whether you trade ES futures, et cetera. But we have certain tools that we use and anticipate the reversal. I called for this daily slingshot, as we call it, when the 4-hour reversed. And this was yesterday during the big sell-off. I said, be careful. We got an inside candle. We're testing the previous days, and we're likely to get a bounce. Even though CPI, I don't know if you follow the media in the news media, but CPI and PPI came out this week. This is PPI's results. I'll go back to CPI. And when this came in slightly hotter than expected, the markets initially sold off to that, thinking, well, if we start getting inflation ramping back up, then the Fed's unlikely going to cut interest rates, right? So when we saw this, I said, don't worry that this is more or less in line. It's slightly a little bit hotter, and the market's overreacted to that pullback that we're likely going to get the bounce. Now, I do use different platforms. We have a software that runs in MetaTrader 4 and also NinjaTrader 8. But I also use TradingView just for charting purposes. And where are we going with the S&P? We have upwards of a 75%. That's good odds that we're going at least to 5,800, if not toward 5,900. And I'm kind of thinking we're going to top out around, and unfortunately, when I put these arrows on here, it won't let me move the chart, so I got to take them off. But here's my target zone. Because of recent price action, and we'll go in a lot of this, we use Fibonacci's day in and day out. We'll teach you different, what we call bounce type of trade. We got Fibonacci bounce trades, and we call some particular support and resistance lines, these magical EMA lines that we use for measured bounces off of those as well. And we're getting a trifecta. And I'll show you what I mean by that. But from this prior high, when the market sold off, some people called that a market crash. It was not a market crash, simply a correction. I called it to come down to these lines and then bounce off of it. By that high to low, there's a rule says if you take and we close a daily candle above, not a wick, but a body, that you close above a 618 retracement, you have upwards of a 75% chance you're going to go to a 1.1448. Never heard of that, have you? What in the world is a 1.1448 retracement? Well, it's an extension in this case, but it happens to be 90% of the 1272 move. And over the years, thousands of hours I've been in this market, trading thousands of students around the world for many years. And this is a high probability target. Even as this was selling back off, we got the close here. I'll circle it for you. That was a daily candle close there, which meant 75% we're going there, 70 plus percent we're going to this target, and a good 40 plus percent chance we're going to that target. All right, so then when we started to lose momentum and we came back down, we called another retracement. How do I know, Frank, when we start pulling back And Chuck, when we started pulling back that this wasn't going to fail and start breaking down, that it was going to bounce and still go to our original targets. Because if you look at the reverse of this, it held a 6.18 retracement. Here's this little box. So as long as this down move held this line to bounce, it was still game on, 75%. So in my humble opinion, we're going to 5,800, 59, and potentially as high as 6,000. The trifecta comes in. Look at the NASDAQ. It has a measured bounce that it went from the low to the high, bounced off the 618, which we look for, and it bounced off these magical lines, which you'll get all this information when you join. And that told us back then, days ago, we closed above that 618 from this high to low. There's my 618. It closed there, so we're going to 21.5. 75%, we're going up to that target. 70 plus, we're going about 21.9, and a very good chance we could even go as high as 23. Well, where's the double bounce come in? We got a measured bounce on top of this, what I call EMA bounce. And when you get the two that lines up like that, it's really very powerful. So this is why I'm calling 75 plus 70% up here, and a good chance we're still going to even go higher. But the plan is once you get up there, you need to be ready to short the market, either by taking your profits in your long positions and putting your gunpowder and storing it for another day, or buying puts. Well, how do I buy puts? Well, QQQ, this is the futures, whether you trade futures or not, but you can use the QQQ. So QQQ is not exactly 22,000. It's basically 1/10 of the price when you use QQQ and others, but you can still use the same range. Like with the Russell, I use the IWM. NASDAQ, you can trade QQQ. ES, you can trade either futures or SPY. But when we start to get to these upper quadrants, whether you're looking at SPX or ES, really doesn't matter. My upper target's still the same, right? And once you get up there, let's see what happened. Just like I warned them when it got up here, we were coming down here. Well, I'm warning you, we got something big brewing. Now, the next question is, was the Fed truly going to cut rates? This is a chart I use to look at. It dictates what the Fed does. Some people think the Fed just raises rates or cut rates when they like to or when they feel like it. They base it on the 2-year Treasury note. So if you use this trading view, you would go to this DGS2, which is this symbol, is the blue line. And then I add the Fed's future rate, which is this orange line. That's the current Fed rate. We're right now between 5.5 and 5.25. This line represents 5.33. I told my students, I said, the Fed's not going to cut rates until we break this swing point low. Now, where are we? We're below that swing point low of about 3.75, 3.75 is where we were about right there. And now we're below it. So next week is the Fed interest rates, and I think they're going to cut it. What's interesting, if you look at this, is look where the current price, where the Fed rate is now, and look where the market rate is now. So theoretically, the Fed could cut as much as let me get my arrows back, a full point. We're at 533, we can come down here to about 433, which would be a full basis point cut. And they would still be a point away from the current market. So why do we even look at this? Anybody recognize this scenario? What happened in 2019 into 2020? COVID. When the blue line races off, the Fed raises rates to chase it. When the blue line starts to tank like this, that's the 2-year Treasury maturity rate. When it starts tanking, the Fed starts cutting rates. And you can go back in history. The markets may like the idea of a rate cut, but when the Fed has to really start cutting rates, it's not a good thing. It's typically revolved around a financial crisis. This was COVID. Anybody recognize the last time we saw this? Back in, let me move these over and stretch that out a little bit for you. What happened in 2000? Everybody remember that goes way back 24 years ago. What happened in 2000? Many of you guys old enough and were trading back in 2000, the dot-com bubble burst. And when that 2-year treasury started dropping, what did the Fed have to do? Cut rates. Then we got into the next one, our next market crisis we had in 2009, moving into 2010 from 2008-ish down. That was that market crash. The bubble burst with those toxic balloon payments and real estate bubble burst, et cetera. That caused the market crash. And what happened when the blue line started tanking? The Fed had to cut rates. Then we came around and this line started running in toward COVID. And what happened? We had to raise rates and then COVID, cut rates. So the last 3 big moves like that were due to financial crisis. What's this next one? Commercial real estate bubble burst, bank insolvencies, our toxic debt because they keep spending billions and trillions like it's nickels and dimes. So I believe they're going to lower rates, but the reason I brought this up initially is based on where current price is and where the Fed rate is. They theoretically could cut a full basis point. What would happen to our charts if we got a full basis point cut? I don't think they're going to do it personally, but anything over a 0.25 rate cut, like 0.5 or higher, I think we're going to blast off into this. And I don't mean it has to be one day, but I think we can get a S&P move of 300 points in one day. One day, if the Fed does more than 25 basis points. Now, what I want to warn you about, what if, as we know, we got a 75% chance we're going up to these targets? Write those down. You can go back in our archives. On our website, we archive back to day one. Over 10 years of archives, and you can see when I did the dollar index, when I called it, when I didn't, et cetera. But this is a high probability target. Now, I'll warn you, if we start over the next few days, we got today, we got Friday, we got Monday, Tuesday, even Wednesday up until the rate decision. If we're already up in here, we might see a big sell-off because maybe the Fed only cuts at 25 basis points and everybody's disappointed because they wanted more. The mindset is that they wanted rate cuts for the last 9 months. Ever since we hit 2024, they were talking about cutting rates, right? And then he had to push the can down the road. We're waiting. It's transitory inflation into we still need to see more data. And then we got to wait and see kind of thing. And he pushed down the can. Now he said rates policies are going to change. When did that happen? It goes back to this chart. We started breaking that swing point low in the last few times when the Fed was talking about rates policy is going to have to change because look at the blue line starting to tank downward. So I do think he's definitely going to cut rates, but is it 25 basis? Is it 50? And again, they could easily do a full point because up here at 5.3, we go to 4.3. We still have 3.3 down here, basically about where we are, 2 points, full basis point. So they could, and I think it's in the markets really bullish. Look out. When they start cutting aggressive rates, COVID, bubble burst, dot-com bubble burst here, real estate bubble burst there, what's the next one? So this is not about doom and gloom. I'm very bullish, even though CPI was a little better, hotter than expected. PPI, I don't know if you normally look at these reports. We briefly cover in our reviews. We have classes 3 times a week, but this was a little bit hotter than expected, 0.3, 3.3. And you see this one right here, 0, they expected 0.2, they got 0.3. Nothing to really worry about, but what's misleading with CPI, well, inflation's down to 2%. It's still increasing. Groceries, gas, everything hasn't come down. It's a lot more expensive than it was 4 years ago for everything you do. Even though these numbers have come down dramatically, it's all that government spending, that $1 trillion deal they put out that caused the inflation to run rampant. Sure, it's coming back down. They did all kind of things to help this, but it's not over by any stretch. So the markets are tending to want to rally. Russell, small caps, Well, Russell has that same measured bounce and a measured bounce and an EMA bounce wrapped into one. That's very bullish to go up here to about 233 if you do an IWM and up to 237. 75% chance we go to 233, about a 70 plus we go up here to 237. And this measured bounce is looking good. So there's tools we use and targets, but today's goal is to give you some market review where we think the markets are going, not after the fact, but before it gets there. Now, this does not mean that we're going to go up every day. Every day. We can get some nice stretches, but I will warn you, if the Fed does cut more than 25 basis points, we're likely to see this rip like it did the last time. What did we have? And I like to use my little measurement. We had a measured bounce. This low to that high was a 618 bounce, which I called for here. And you see my little previous box. And we got a beautiful extension move to up to the 224 target. And it went a little bit higher, but that was the measured bounce that gives a little oomph. So what if we get a little oomph in this one? We could go as high as 248 if we get another oomph on that one. But first target is going to be 230. I'm a little conservative in the number. I see 233. But think about it. Every algo and every trader out there can put Fibos on their chart, and they can ultimately put these levels, but I use them as fuzzy zones. So I tend to be a little more conservative in my target. That's why I started using what I call a 90% of the 272 retracement. And just one second, I got to let some more attendees in. And this is a high probability target. So what I meant by the trifecta, we got a measured bounce on the Russell. We got a measured bounce, whether you're using futures or not. Well, I'll do this, not the Nikkei, sorry, the NASDAQ, measured bounce. Not only is it a measured bounce, it's a measured EMA, it's a double bounce, measured bounce plus a EMA bounce. And if that doesn't mean anything to you, you'll see the power of this program with the software, why it goes up to these targets. So these targets are very high probability in the weeks and months to come, and we're expecting more upside. NASDAQ futures a little bit different. Well, look at the prices. 448, a little bit difference, pretty close in these two. But between futures and SPX, you can see there's a little bit different. We just starting to get a new contract. Sometimes this will split differently as your contract prices open and start. This was a bigger spread as we were opening the new month. And as we get closer to the expiration, they get close again. But I use this little 2 ES1 exclamation point. That gives you automatic flip over of your contracts. You don't have to then change from the different U to this and that and the other. You just put this 1 exclamation point. So 21.5, 21.9 for ES, for NASDAQ, sorry. ES is my 58, 5880 slash as high as 6,000. And in either case, it's because the Fed cuts rates, we get up here. You need to be taking profits and you need to look for a shorting opportunity. Minimum suggests you take your money out of your long position, put it on the side and wait for a day. But I do like to buy insurance, whether I buy VIX calls when the market sells off. VIX spiked up beautifully. When the markets are ripping, VIX goes back to its kind of resting rate. Then we get a sell off and VIX will go spiking. So you use that like an insurance. Or you can buy, in this case, SPY puts or QQQ puts, or even the Russell, you can use IWM puts. But when we get up to these targets, which we're 75%, we're going up there, it's likely we're going to see a big reversal. And you can wonder why. Go to these higher time frames. We're long overdue. So mark these levels down. Where these EMAs rest, around the 205 range on IWM. After we go up, and again, these kind of move as the market rallies. You can see we've been in an upslope when the markets are rallying, and we still somewhat of an upslope, even though we did get a pullback. The biases were still going up here. So these lines will be dragging along each day, or whatever time frame you're on, each day, each week. you get a new extension of these. But if we break the support zone of these EMAs, then guess where the big corrections are going to go to? And I'll move it over here to the weekly. It's going down here to our EMAs on the monthly, weekly chart. So that would put us down about 190, 193, 195 area. So also some extensions. So why are you giving me this target now? Because after we get up here, that's the projected path where we're going to get another big retracement. And what else do we have going for us? I don't know if you guys follow this in stocks and with earnings. There's a rolling 5-day buyback estimate. And look at the projected estimate as we get to the end, latter year, the third quarter end, fourth quarter begin. Corporate buybacks are supposed to reach projected. Again, this is an estimate because we haven't happened yet. They're projecting to be the highest buyback in last few years. You can look as we go from 12/28 down 11 into the new year. We started the new year here, half year back. This is the highest projected buybacks, which is in the $55 billion range. So I'm looking for that rally because the Fed cuts rates. Then as all this money starts getting pulled out of the markets, they call a blackout, they're not able to buy their own stock back ahead of earnings, which puts us in November. So I'm thinking we're going to get that pullback, whether it's late September, October kind of thing. Then we look for the Santa Claus rallies as they restart investing in their buyback. And why is that important? What happened last time? What happened the last two Octobers? Octobers tend to be a pullback. Last October, we got a nice pullback. That's the one I called for as well, not only on Russell, but ES, etc. October lows, 22. Then we got another nice pullback in our October 23. Over here is 22, 20. And what is this time frame? I'm on a weekly. Okay, so let me go to the daily. It shows it better. But you can see that the October lows, as we went from August into September, October, and we finally bottomed right before the big Santa Claus rally. Called that one very well. I didn't know we were going to go this extreme amounts, but I did call for a big reversal Santa Claus rally, and the students made out very well on these moves. You know, typically you hear futures traders, they die and go to heaven when they make a point or two. Well, when these setups set up, you're getting 50, 60, 100, several hundreds a point. And I call that die and go to heaven several times. What about gold? Let's kind of touch the bases. Gold, finally breaking out today. Been calling for that for the longest. What else did we get? Everybody recognize this breakout? From this low to that high is a measured bounce with the EMA bounce. Look how it gets ahead of steam every time you see those. Highest of probabilities, you get these big measured bounces. And the software set up beautifully on that same reversal. So I'll show you what that looks like. Come over here to gold. Here's my gold weekly. Well, that's my wave count. But here's the gold wave count. We had a beautiful 618% retracement from the prior low to the high. Got a beautiful 618% retracement. And it was on top of EMA bounce. So it's a measured bounce combined with an EMA bounce. And that's on a weekly chart. Those get real exciting. So we typically get at least a 1618 out of it. All right, a little more rambunctious, more than the 1272. We get up to the 1618 and can even extend further. Well, we already obviously extended further, but that's part of the recent pullback and retracements. So gold is going to reach the targets, and I do have that on this platform. I can't draw it on some of those MetaTrader charts because it doesn't allow me to compress it enough. But gold, for example, has our chart and targets up here, right up here. Where's gold going? Gold's going to 3,000. I think there's no ifs, no buts, no ands, no exception. Gold's going at least to 3,000. Does that mean it's going to go straight up? Price never goes straight up. You always get the support and resistance. It'll bog out at resistance. The software will be topping on multiple time frames, telling you it's time for a pullback. You look for your retracements, you look for these support zones, and then you rinse and repeat. Buy the dip, look for the surge, especially when the trend is still up. And I've been talking about that trend for quite some time, and we're still in it to win it, even thousands of points. In this way, we're down here at 1,500, hundreds and hundreds and hundreds of dollars later, and we still got a lot more to go. But as we warned, some of these pullbacks and consolidations, these all occurred at extension levels. And you see the lines on the chart. I know it's busy, but these were all extension levels. We called for some consolidation. When we finally broke out, I said it would run to 25.26. We're at 25.55 right now, upwards to as high as my 26.60 before we get some sort of retracement. So I'm thinking we still got a little bit more meat on that bone. We're not going to go straight to 3,000. I think we're going to get some sort of pullback, and then we're going to look for a pullback somewhere from this box down to somewhere during this consolidation. And I would love to see this. See how the EMAs are still sloping upwards? And we get up to this target, we come back and retest that EMA to then bounce and give us another measured bounce to then get us to 3,000. So basically, I think gold is going to go up. It's going to come down. So I got to do it in I'll use my other arrow so I can just keep going. So I think gold is going to go up and reverse somewhere in this zone. Then it's going to come back down probably, and I'd love to see a move toward these EMAs. So somewhere about 2,500, 24-ish. Then it's going to bounce and go up toward 3,000. So that's my projected anticipated path for gold. Silver, beautiful measured bounce, which happens to be not only the low to high measured bounce, which again is off the 618, no lower than the 786. So that's why I use the 618, 786 as the zone. And we have a what? EMA bounce with a measured bounce, the double whammy. So minimum target 30. And once we clear that hurdle of 30, we're going to 33, then 35. I told our members to sell a credit spread to bring in some money and buy some out of the money call options a long time ago and extend it out to 2025 as far as you could, even 2026. We're up huge on those trades because the money I took from the spread, I bought these out of the money call options, which are now in the money because we were way down here when we talked about it. And the goal and my target is 35 by year end. And if it gets real spicy after another measured bounce, EMA combined bounce, I think we'd even potentially reach 40 up here to that next extension by year end. But I'm conservative. I'm going with the 35 target by year end. So there's still plenty of meat left on this bone to go higher. I don't care how you trade it, just buy it outright and hold it. Silver is going to go much higher, just like gold is going to go much higher in the months and years to come. We're in a multi-year bull run for these, and silver is just getting started. It's so underperformed over gold. We're nowhere near our highs, right? Nowhere near. Way over here was 50 bucks. Let me go to a weekly. It was in the $50 range or right at 50. So we're nowhere near close to 50, 49-ish. Yeah, right at 50. So anyway, we're nowhere near that bull run. But guess what? If you take the silver high to the long-term low, look at where we're getting close to as we start breaking my 32, 37, 35, maybe 40 target. Look where that 618 is. That's a much longer multi-year target. But if we close, especially on a weekly candle body, not a wick, but a weekly candle body, then the rule says we have upwards of a 75% chance we're going up to $69, $85, and further extensions would be in the hundreds, 101, 130. So, well, Gary, how long are we talking before then? Well, my year end is 35. And that's a long way off, talking 69. That's like a double. But if this move from the higher to the low breaks that 40 range and we close above it, then we have a 75+% chance we're going up near 70, at least. And that'll be part of the program. in the future, obviously. Black gold, I have a knack of all of these rinse and repeat software. Why am I expecting gold that I was just picturing with the software? Look at the weekly. It's at extreme. Let me move this out of your way. We're on a weekly chart. This is gold. So I do think there's a little something left in this. And a monthly is also at extremes. It's still up. So this is why I'm expecting we're going to get the monthly to start hooking down as we reach those target zone. And then we're going to get that pullback. I do expect gold's not going to cycle down on a monthly. It is going to slingshot higher again. So if I draw what the software is going to look like, I call this painting the PAI MPA software Picasso. It's going to end up slingshotting in the years to come, as opposed to selling off and going down real big. And we're going to go up to what, 3,000 and potentially higher. But in the interim, I'm looking for a pullback because we're getting exhausted. That's an exhaustive run. As you can see, PAI trend momentum's at extreme. What is the key with the hook and the cross? You wait for them to hook, and then the cross is the follow through. So my weekly's at extremes and my daily's at extreme. So as gold gets toward our 25, well, we're already starting to reach it at 25.50, upwards to maybe 26.50, maybe if we're lucky, as high as 27 before it reverses. And then we're going to get a nice little reversal back to the consolidation area, which puts us about that 2400, which is again the EMAs that I'm looking for this. Once we finish and we start turning over, when I know we're done, the key with this is when you get a PAI hook and a trend momentum cross on any time frame, this is a daily, the 4-hour cycles down. Wow. That is the highest probability that 4 hours is going to cycle down. What does it do? The 4-hour cycles down. Every time we get a daily hook and a cross, highest probability the 4-hour cycles down. What about a weekly hook and a cross? Well, whether it hooks up, hooks down, you get the type of hook with cross, slope angle separation. The daily is going to cycle. A monthly hooks and crosses, the weekly is going to cycle. So each time frame is separate, but yet it tells you what the other time frames are going to do in advance. So a monthly takes longer to cycle than a weekly. That's by design. So a weekly, in order for a monthly to cycle, a weekly has to cycle plus slingshot. So if we just draw, and I know this is from past price history, but this is how it worked. You get the hook and the cross, and this thing cycled. I can tell you what that weekly looks like in here right there. So between that trend momentum cycling and the PAI, red, blue, and green cycling, what happened in here? My weekly is going to cycle up and it's going to slingshot higher. Absolutely give it. So you go, am I on the weekly right now? Okay, that's my weekly. So in this case, my daily is going to go up and then slingshot higher between these two lines. Watch the daily. I'm going to turn my auto scroll off. I'm going to go back. And this is not just past testing. This is live market conditions. What does the daily do? Go from oversold to overbought. And what does it do? Slingshot, 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 slingshot. That's how a weekly cycles and my daily cycles. So these are very important to know. So if I'm a day trader, what if I'm simply a day trader and I want to trade a daily time frame? Well, we have timing on this. A daily takes about 2 to 5 weeks to cycle. So I get a weekly hook. This is just for options traders, perhaps. We're getting a weekly hook on what? Oil trade. We're getting a weekly hook on this, right? We're oversold. We're about to get that weekly to start hooking up. And my daily already gave us the reversal. These are what we call hook and cross trade triggers. So you can set your trade management system to buy this automatically. So if you're not at your computer, it will enter the trade for you. And all you do is click that ready to trade. You go into your expert advisor, you set up the principles, you go under inputs, and you would come down here. We call that a trigger, buy trigger long. When we want to short something and we're overbought, you buy trigger short. and it's rinse and repeat, and it's automated to the sense where it'll do it without you, or you can go click the trade and buy as soon as you see a cross. And the probability we're going to get much more upside on oil is because my weekly's already oversold. So the likelihood this keeps slingshotting lower, which I called these, I told you, you can get in, but take profits because we're going to come back down. You can get in, but take profits. We're going to come back down. I called the 60-65 bottom, and that's where we're bouncing from. And we're starting to move up with a hook and a cross. So what does a daily hook and a cross equal? One time frame lower cycle. It. So how can that help me as a trader? If I'm buying a daily hook and I want to trade this option wise, this takes about 2 to 5 days for a 4-hour to cycle. So as an option trader, if I get my hook and cross early on like the beginning of the week, then I could buy a weekly expiration option very close to expiration. So your time decay is minimal because you're already pretty close to expiration. And you have a 4-hour cycle that gives you targets as well as how much time I'm going to be in that trade. And it gives you take profit times, which we get these little take profit triggers. See these little orange, yellow one? That's when you get oversold and you're short. And then you get them to the upside when you're long and you're getting overbought. They tell you as a reminder, you should be taking profits. Whether I'm in a long trade, they point downward. When I'm in a short trade, they point upwards. And it's telling me when I'm getting overbought or oversold per time frame. And all that is customizable and programmable. Next up, this is a biggie. I don't know if you guys trade crypto, but we got some crypto trade setups that are massive, and I'm going to show you those real briefly and why I think this Bitcoin is not quite ready to go breaking out. My target for Bitcoin by the time we get to mid to late 2025, Bitcoin is going to be minimum 150,000, upwards to 300,000. And Gary, I don't trade crypto. Well, you don't have to. You don't have to go to crypto.com or Coinbase, or if you're outside the US, go to Binance. There's hundreds of crypto brokers where you can buy Bitcoin and stick it in your wallet or leave it in their broker account until you're ready to sell it. But why do I think this is? I knew it was going to bounce. Well, we got several problems. We're below these EMAs that are magical. That's could be where we rally and fail again. And more importantly, look what we have. We have a monthly hook, we have a monthly cross, we have slope, and we have angle separation. Remember what I just said, when a monthly hooks and crosses, you get slope, angle separation, then that means the weekly should cycle down. My weekly's not finished, right? So this is a strong reason why I don't think Bitcoin's ready to go popping just yet. I think Bitcoin's going to fizzle and wouldn't be surprised we get one more flush. Question is, do we flush lower than the market meltdown the other day when it was supposedly carry trade unfolding and we got what some people called a market crash, which was not a crash, just a correction. Could we go lower? Yeah. The lowest I think Bitcoin will go, if it does, is down to these EMAs on the weekly chart, which puts us about 40,000. What if happens if it gets to 40,000 by the time this weekly finishes? I'm buying the daylights out of Bitcoin as we then reverse weekly, because that monthly is going to end up slingshotting higher and higher. So I like to draw what it's going to look like. My opinion, this is going to come down. This is going to come down. And whether or not we actually break this low or we do break it, I'd love to see it break it to come to those EMAs on that weekly chart. That's setting up a measured bounce. Again, yet the measured bounce and an EMA bounce on a weekly chart. That's what Bitcoin, I think, is going to end up showing, and it's going to go to 150 to 300. So this is why I don't think Bitcoin is quite ready to run off just yet. And yes, it's the daily reversing, but this is going to end up going up like this, slingshotting back down. This will probably turn back down. We'll end up coming back down. Again, whether or not we break the low, if we do, I think we'll go as low as 40,000 range. And I'm anticipating that we're going to get this weekly to reverse. So what can you do with a trade management system? You can go into your property. You can set your take loss, take profits, etc. But right here is where you'd go, I want to buy a trigger long. I don't want to trigger short. No care for that. I don't want a slingshot short right now. I want this to finish its cycle. So I'm not worried about that. I'm going to push that false. And do I want a trigger short, slingshot short? No, no. I simply want this trigger long. And what is a trigger long? So when I set that, and what is a trigger long? A trigger long is that little green trigger we showed you. And when it gets oversold, that's when it fires and we start to get a hook. That's when it'll fire for you. All right? Everybody good so far? So I can set that in advance, and when I'm ready and I got it set to my particular liking, what if I'm a scalper? What works on every time frame? Then I set my take profits much closer. When I'm doing this big trade, I'm setting my first take profit at Bitcoin for 150,000, my second take profit at 300,000. Now I'm gonna go back to the charting platform. I use TradingView just for quick charting purposes. And we come to Bitcoin. And this will show you, I'm going to show you a couple of things why I think this is so important. Whether you know the history of Bitcoin or not, we have had, now we go to a weekly chart to start. Quick little story. We have had 4 halvings. You don't need to know all this, but there were 4 crypto halvings. Bitcoin goes on a massive run for 12 to 18 months post-halving. Every time it makes a massive run, thousands of percent increase. And it went from pennies to hundreds. And then we got a crypto winter to the next halving, the blue lines of the halvings, every 4 years. So this was back in December. Let me stretch it out a little bit. In 12, then we had one in 16, then in 20, then in 24 most recently, back in April. So 2 things, 12 to 18 month big run, which is a given. Every time it's done that, and from the crypto winter low prior to the halving, so from the prior run to the lowest low, then into the halving, 220 to 240 days later, you break all-time highs. Every one of these halvings that's happened. Only difference this halving, we broke all-time highs before the actual halving event. That was because of what? The ETFs that were approved. We're going to go over those in a minute. But what else do we know? So 220 days post-halving, we should break all-time highs. So let's go back to the daily chart. And we showed you on the software, the weekly's not finished. So I definitely want to buy that, especially if we get another push lower. If we get that push lower down to about 40,000, which is what my weekly EMAs, I'm just going to draw it on this chart. My weekly EMAs are sitting there around that 40,000 range. And if we get that flush and that weekly finishes the cycle and we come down there, that would put us somewhere into our 220 day is right there, and that is November. See this little blue chart right there? That's my 220 days post-halving. That is right around Thanksgiving time. So in the 3 previous halvings, we broke all-time highs within that 220, 240 day period. What if we come down to 40 and we pushing that into October? That means Bitcoin should basically double in the next month, because by November, the 220 days, we have to at least start breaking 73,000. That got your interest? So I'm looking for a flush. If we get it, man, I'm backing the truck up, looking for opportunities for this thing to go way higher. And knowing my 220 days gets me into November, and we just should be breaking all-time highs. But that, again, is not my target. My target is 150 to 300,000. You go, well, that's a huge target. It comes from the rule. Every time you get a crypto halving top, you get a crypto winter bottom, Bitcoin has done 10x or 20x every time. Well, from our bottom here in the 15,000 range, that puts us in the 150,000 range. That's 10x. If it does 20x, that puts us in the 300,000 range. So this is a conservative target. 150 is conservative, 300 might end up being conservative. But that's what Bitcoin has done every time. Well, what if I don't trade Bitcoin and I don't buy it? Well, again, they are several, which you've probably heard of. One of my favorites is IBIT. That's the BlackRock iShares Bitcoin Trust ETF. And we talked about this when it first came out. We looked for a swing point low, told everyone we're probably going to come down to this low. And even as we started rallying, I don't care if you got filled up here, Frank, say you own IBIT, and you got filled at $42 and you're feeling kind of under the weather because you're down here in the 30s. Like, what? And even when it spiked down here to 28, what? Hold it. Don't do anything with these except keep buying the dips until we get into our 12 to 18 months. My projected path on this, and we don't have history on that. We don't have a prior crypto bull run to see what these type of things have done before because they're new. But I'm projecting they're going to be in the hundreds. So you bought it at 40, you should be in the 100 plus, more than double, triple your money minimum, even if you bought it at the swing point high. But we might get that flush. So I have junk bids in my broker account. Hey, I want to buy some more IBIT shares. If we get down to 30, 38, 28, et cetera, we get some more of this flush down. I want to get some more fills in here. Will we get back to this low and maybe lower? If it does, I just get on my knees and look to heaven and go, thank you, because that's even better. Even if I bought up at the 40s and I get it down here, I can price cost average down here, dollar cost average, and buy more shares. New days, you don't pay fees for it, and you can buy one share at a time, or even some of these let you buy partial shares, which is amazing. So this is a high probability trade. You join our service and you sign up for the annual, we have some extra bonuses for you, but we're going to take you through this walk. And this would more than pay for multiple subscriptions just on a couple of these. What if I don't trade IBIT? Well, that's just one of the ETF. That's one of my favorite ones. And this will be interest to you. This is owned by BlackRock. See area under management right here? Area under management, only 20 billion. That's a lot of money. Don't get me wrong, but 20 billion is a drop in the bucket. They have 14 trillion under management. Just BlackRock alone has $14 trillion. The mantra for all crypto funds is to put 1% into Bitcoin. What's 1% of 14 trillion? Anybody know? Anybody know? 120 billion. So that tells me just as a conservative figure, they're going to put another 100 billion of money into this thing. They can't just put 100 billion in one day. It takes time. Over the coming months and year plus, they're going to keep piling into this. But this is where this thing is going to take off like a rocket. Ethereum, that's the too big too. How do I know? This is a site, whether you know about it or not, I recommend you save this. CoinMarketCap.com. There are 2.4 million cryptos, 789 exchanges, and 2 trillion market cap right now. Well, look who makes up the overall. 56.5 is Bitcoin, 14.5 is Ethereum. Basically, we're in the 70+%. All crypto market cap comes from two symbols. So this is the two I focus mostly on. We do in our service offer some other ones. I like Solana, I like some others, so I won't go into all that right now. But these are the two. So what is Ethereum going to do? Ethereum looks even more anemic than Bitcoin. So I'm going to come over here to my Ethereum chart. It's over here. We're going to show you, we have a scanner that you can set up that gives you these triggers when they set up, all this information. But for Ethereum, it looks even more anemic. My weekly is getting closer and closer oversold. My monthly gave us the same hook and across, steep slope angle separation. So remember, rinse and repeat, simple common sense. When you get a monthly hook, you get a monthly cross, you get slope, and you get angle separation. What do I mean by slope? Steep slope, angle separation. The green for the up move crosses below the red, and we get a little separation. Cross, hook, cross. So you'll hear that hook and cross line of progression. That line of progression is when a monthly does it, the weekly cycles. Look, we're there. and we're also reaching those EMAs right now. So I still think on a chart, looking at the lower time frame, this pattern doesn't look complete. It looks like we need to have one more flush lower. So I would not be surprised that Bitcoin flushes to finish its weekly cycle, Ethereum flushes, and then we look for an opportunity for a reversal. Well, what do we trade if we do Ethereum? Ethereum just got some approvals for their ETFs. And the one I like for Ethereum, got to move this guy out of the way. The one I like for Ethereum is ETHU. This is a 2X ETF. This is one, and disclaimer, I do own this one. I own hundreds of shares and I'm buying hundreds more. And this was a beautiful move. When Bitcoin did its drop down, we had the market meltdown and everybody's thinking it was a crash. I told our students, look, you need to set some buy alerts, some limit orders, at least $7.50, maybe $6. I had those set and I gave, this is what I'm doing. I can't tell you what to do, but I can tell you what I'm doing. So when we all set those entry criteria there with limit orders, and I use TD Ameritrade, is now Charles Schwab is one of my, I got several brokers, but one of those, notice this gap down. It gapped down and opened at $4.10, right? Let me get to that swing point, that gap down. From that gap, and we come down, let me stretch this out so we can see it a little bit better. I'll bring this over. So when we had that gap down, the market melted down, look at what came, and then you do the swing point low. $4, you see it right there, 410, when I put it over that cursor. So my limit orders that I was waiting to get filled at 750, 7, 6, because of these extensions, right? $8, $7.50, 6. So I was looking for these extensions to come into play, and it gapped down because it's 2X. So I actually got filled all of those limit orders at 410. So I'm a happy camper, right? Even if you bought this ETHU way up here at $16, hold it. It's going to the moon before we're done. But what if we get that flush out? I have new limit orders down here at $4, $3.50, a little bit above this, $3.50, maybe $2. And what if they never get filled? No harm, no foul, none. But this 2X means when Ethereum doubles, it's going to quadruple. And Ethereum doubles again, it's going to quadruple. And I'm expecting Ethereum to get to 10,000 minimum. And you'll see I have my targets over here when I go to my weekly chart. And I do use Elliott Wave, so this is not a requirement. That's my job. Is to say, Frank, I use Elliott Wave because it's turn-by-turn GPS coordinate, and it tells me where we're going, highest probability, and then the software also makes this Elliott Wave even more powerful. So no matter what tool you use, Fibonacci's, Elliott Wave, you're a candlestick guru, this will make it a lot better for you when these set up and we get the hook and the cross. For options traders, it's a gold mine because my monthly takes 2 to 5 years to cycle. My weekly takes 2 to 5 months to cycle. My daily takes 2 to 5 weeks to cycle. So if I'm expecting a daily cycle because my weekly's hooked and crossed, then I know I can do options at least, say, 6 weeks out, 2 to 5 weeks minimum. That's what it takes. So I don't want to do a weekly option when I know it's going to take about 4 to 6 weeks to get up here, 5-ish weeks on average. Got it? So this is why I think we're going to go a long way. Look at my target for this. This is this crypto bull run, 13, 18, 22. No way we can go from 2,000 to 13,000. That's kind of my minimum target. I will say 10 is a bare bone minimum, but 13, 18, and then 22. Where could something like that come from? Well, notice this. It's actually damn conservative if you put it into perspective. So I'm going to go to the weekly chart so we can see what happened. And you'll see this big box. It's kind of noxious, but it is what it is. So last halving, we came into COVID. Then we went into the crypto halving, and Ethereum rallied from about $90 all the way up to its 4,000, almost 5,000 range, right? The top. And it went up 5,291%. All that is from the crypto winter low to the bull run high of the last crypto run. What if we get from this crypto low to the new and we just do the same thing? What if we do that? Look at that target. See it? 47,000. If we mimic what happened the last bull run and Ethereum makes a run up there, we're looking at 47,000. Now, do you think that 13, 18, and 22 is outrageous? Is it insane to go that high? Not implying we're definitely going to get that high, but it gives us an opportunity if Bitcoin does, or in this case, Ethereum doubles, where we're at 25, we got to double to get to 5, double again just to get to the minimum target, and double again to kind of get to where we think we're going. So we're a doubles. As we do that, what does that tell you about this? That is 2x, 2 times the leverage. So if it doubles, it's going to quadruple. And it doubles again, it's going to quadruple. And what happens when we quadruple? Targeting off the chart up here above 80 into the hundreds. ETHU, and you can get it for dirt cheap right now, and maybe even get it for $3 to $2 range. We may get that flush. So what do I have to lose? I got some bid orders. It's taking some of my available gunpowder to trade with, but I got it just sitting there like I did here, and I got filled at 410 instead of 8, 750, and 6. I got filled at 410. I love it. So I'm going to do it again. Set it here. We go ripping higher, then I'll just cancel those and worry about it later. But if I do, I'll just add more to my position. So these are some great opportunities that are setting up, and the software is 100% behind everything I'm saying. So back here again, this one's already oversold, so maybe we don't get the flood. But as Bitcoin goes, the crypto market goes. I've never really seen where Bitcoin just goes tumbling and tanks to the bottom and all of crypto's on a massive run. Doesn't happen. So if Bitcoin does, all this means is this is going to go further down, this will go further down. And boy, when this baby starts reversing, we get that trigger to go long, it's good to go. And you can buy that. And then whether you trade crypto or not, I do all the above. We cover everything in our classes, and we cover it all. I didn't want to keep you too long, but I just wanted to cover the major markets. And I think we do this rinse and repeat often. I will review an older trade that we've been in, and I'm looking to get back in, and that is the dollar yen. Dollar yen is a carry trade. If you were long the dollar yen in this class when I called it, you would be up thousands and thousands of pips. But by being long the dollar, high interest rate, negative interest rate, so by being long this, you get paid interest payments every day. And if you trade standard lots, you'd be making thousands of dollars, depending on how many, thousands a month just in interest. If you trade many lots, like up to one standard lot, you're still going to be, one standard lot will make you hundreds of dollars, $100+ a month, hundreds on one standard lot. And we talked about buying it when it was way low. And off this latest pullback, I went in at this point in the archive. I said, from this low, we're going up to 160 at least. That's 4,000 pips, or almost 4,000. 37, 47, 57, 3,000 plus pips. And this is why you need to be a part of our service. We will build your trust in us by giving you high probability outcomes, teaching you the tools you need, and the last software you'll ever need to work it. I don't do anything without the software. I do use charting platforms I use because I like my Fibonacci's, and it gets a lot busier, and especially if I'm trading on these charts. I don't want all this on my trading charts. I like to have them somewhere else. So that's why I flip back and forth. But what's setting up on this? We have, I know you're excited, we have a measured bounce tying in with the EMAs. Everybody see it? And no, we still got to go up a ways before we start targeting high probability targets up here at that 160 again, 166, moving higher. But this is a measured bounce. And what do we have to promote that we're likely going to get some sort of bounce here is our software. And our software shows that we are setting up with a weekly oversold, starting to give us a little bottoming scenario. There's my trigger saying we're starting to bottom, and a daily reversal right there. So could we go lower? Yeah, I could still go a little lower, but it's starting to set up. So what am I looking for? I need to see proof that we're ready to start bouncing, but a high probability when my daily and weekly start getting oversold, it's time for a bounce. What happened the last time we had one of these weeklies oversold and dailies oversold? We went from that 127 up to the 160 target. Well, if this holds and we end up breaking out, we got a few things we have to prove. From the high to the low, you got to go break the 618 to the upside to really get your juices flowing for this thing to go to those extensions. So it took a little while, but once we did it, it just kind of endorsed the idea we were going to 160. This is in archives. It's not something I'm saying after the fact. So are we likely to go higher? Well, it's possible that could be it. And we start cutting interest rates dramatically. And I don't really see Japan raising interest rates too aggressively. They're an exporter nation. They do have a new prime minister that says he's going to start raising interest rates. They've been in that same kind of muck and mire for decades. And this no to low interest rate procedure, they may need to start, because inflation is starting to rear, they may need to start raising interest rates. But I still think I go technical. Not so much about interest rate hikes and not. Yes, it affects markets, but I simply go by the hook and the cross, and I don't worry about media, the news, talking heads, CNBC, Bloomberg, any of them. I don't care. I simply go by what I know. And that is when we get a hook and a cross, my daily is going to cycle. No ifs, no buts, no ands, and I won't say no exceptions. Sometimes it fails, but it's extremely low probability. The key to trading is know where my support is, where I should be buying from, know where my resistance is, where I should be taking profits. And if my weekly hooks and crosses, we're going to get the daily to cycle. It does it every time. And it's a high probability. When was the last time we got that weekly hook and a cross? I do a lot of show and tell here, but this is live action. And we got the weekly hook and a cross back here. Actually, I got to use this one. I keep using the wrong one. This one here, when we were bottoming, we came down to that 127 target. I was telling everybody, man, we hold that 127. We get our weekly start hooking and crossing, right? Got my triggers, got this oversold. And what happened? My weekly, this is a weekly, my weekly ended up cycling. And we finally grinded and slingshot, engaged down, disengaged, slingshot up. Finally came to a point to where, again, I use the wrong one, came to this point. But I already know what my software looked between these two lines, and then later between the additional slingshot higher to this line. One more time, that one, drop a line. So from the weekly to the daily, what do we know? We know like clockwork, turn the auto scroll off, go back. We know like clockwork. My daily started to reversal early until my weekly finally did its thing. And this is kind of what we're seeing on the dollar yen now. It's kind of engaging over, doesn't look too positive. It's not doing a whole lot. But once that weekly hooked and crossed, what happened? Daily cycled. Then it went on to start slingshotting and slingshotting. Then it cycled back down because my weekly hooked and crossed. Then we got the daily to do it again, cycle, 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 cycle. And that's how we got all the way to 160 up there. And it continued even further with additional corrections. All right, so I don't want to keep you all day. Believe me, I can do this. My live classes, Tuesday, Wednesdays, and Thursdays, we spend 2 hours minimum. So let's get back to the nitty gritty. What is our program? Master Trader program includes the software and it includes the live trade class. Just as an FYI, we're offering the class that's conducted 3 times a week and it's available on demand. We go on demand back decades, decade plus plus. As long as I've been recording these live class 3 times a week, you got it all the way back. And you can see when I called them and where I said the targets were and how they ended up playing out and how we paint that Picasso. With the software, you get the market scanner. What's a market scanner? It's this guy. I can set whatever symbols I want in here, stocks, commodities, futures, whatever I'm trading, and it gives me a high-level overview of the time frame. When the triggers are firing, when they're not, when the trend momentum and PAI are about to start reversing. All this information is at your fingertips, support and resistance. It gives it all to you. Then we have what we call a slice of heaven finder. I'm going to show you a picture of what that is. It sets up where I can set a monthly time frame to see when it's setting up for a monthly move. I can set it to a weekly time frame when it's setting up for weekly moves, daily moves, 4-hour, etc. So you can set that to your preference, whether you're scalper, day trader, position trader. MPA hook and cross trade triggers. We showed you those. Trade management system, the hook and cross trade manager system. And this will tell you, and you set it automatically, or you can just manually use it to manage your trades. We have a scalping system, the Platinum Asian, the Triple P. This is more for Forex, but these work for any scalper, but I do use this one mostly in Forex and this in other markets. And then our breakout trade manager, I can set my trade manager for when a breakout occurs. Set some lines on it, and when it breaks to the upside, it'll go long. If it breaks to the downside, it'll go short for me. And then we could do a bracket order. This one's a little bit different. A breakout, you can force it to enter the trade for you. The bracket, it'll only enter if it breaks the low or breaks the high. This is a picture of the scanner I just showed you live. This is what the slice of heaven finder looks like. You set the time frame, daily, 4-hour, 1 hour. You can do a monthly, weekly, daily, and it kind of tells you what's setting up, what triggers are firing, slingshots, etc. All that information we discuss in class, train you, teach you everything you need to know. And then it'll go through all of your profile and say what symbols are setting up. Here's just a quick example of another chart. These triggers fire when you're overbought, start hooking down, they fire. Then when you're oversold, and you start hooking back up, they fire. These are called take profit triggers. When they're facing up, you're in a short trade, they'll take profits for you when you start getting oversold. And then on an uptrend, when you start getting overbought, they fire for you. So it's all for your ease and use. Just a simple show of what the trade management looks like when it's engaged and you're in a trade in progress. It will enter the trade for you. It'll manage your stop loss. When you hit a take profit, it moves your stop loss in the profit. Then it'll manage it till you hit take profit 1, 2, we hit here. 3 still ongoing. This was an older trade. And then you see it running in the trade manager down here in MetaTrader. Right, but that's what it's color coded. So when I'm in a long trade, all this stuff is green. When I'm in a short trade, all this stuff is red. Everything's color coded. How cool is that? Then we got these setups where we get to oversold is minus 50, depending on what you're looking at. PAI and trend momentum, the price action, you want to be above 50, above 80 or below 20. When we're in this zone, we're overbought when we're 80 and above, and we're oversold when we're at 20 and below. On the trend momentum scale, we're considered overbought when we're 50 above, and when we're 50 or below, we're oversold. That's what this is. Notice green line, when you're oversold, you're looking to buy. Overbought, you're looking to sell. Red line. Everything's color-coded for your convenience. And then it gives you, I'll go back, it gives you what I'm in, how many lots I got on board, what my take profits are, my stop loss, etc., and time frame schedule here, like an overview. So you should never be caught off guard. Where am I? How much am I up? All this is there for you. Now, 10 reasons you should trade with the software, because it gives you in advance directions, take profits, but just to read these, automatically calculate support and resistance. I didn't even show you that, but you simply go over here, this one over here, sorry. You come over here to your indicators. That's my expert advisors, indicators, and I come to signal confirmation. I drop and drag signal confirmation on here. This gives me all my support and resistance inputs. And depending if I'm trading higher time frames or not, I typically will turn off the dailies because I'm more interested in the higher time frames and a larger move. But this will show you, and I leave my weeklies and monthlies, etc., on here. You say, okay, it'll automatically pop in these critical support and resistance level. These things are like magnets, runs up, comes down, bounces. We're looking for potential slingshots off of support. We're looking for potential rallies where I'm telling you where the market's going. And I even give you insight to where these corrections are headed. But you can see that we're expecting this to go lower, even though it's bouncing lower. And then we'll look for it. Maybe it intersects with this lines. Whenever you see a green and a dotted line overlap each other, that's even stronger support and resistance. So whether you want that on a chart or not, and you think it's too busy, then I could pop, horizontal lines across here so I know where they are, or I can just pay attention and leave them on the chart. That's what that means, that you automatically calculate support and resistance. Automatically identifies the trend of each time frame based on the hook and the cross. Automatically monitors and tracks every time frame cycle. Provides consistent entries, exits, and take profits. Based on what? Our trade triggers, our slingshots, and our profit triggers. You can set it in advance so that it's in ready to trade mode to take a trade. So you can see this one on Bitcoin, for example. Well, I can do ready to trade on any of these. And when it's in ready to trade mode, I can instantly buy it, instantly sell it, or if I set the parameters to buy those triggers I showed you earlier, it'll enter it when it's in ready to trade mode. And if it takes weeks, so I'll show you one that is active that I'm waiting for, and it's a trade alert that I sent out to our group. I'm expecting that dollar index to grind a little further, and which means the euro should pull back a little further, and I'm setting that up for a trade in advance. And the beauty of that is if I'm a longer term trader, I can set that up in advance. So based on this scenario, I'm expecting the euro to continue lower until my daily gets oversold. And remember, a cycle is not red or blue, it's red, blue, and green. So a full cycle. So I'm waiting for this guy to get down here. And that's when the triggers fire. When all three are in oversold territory, you'll fire. When they're all oversold, trend momentum, PAI, they'll fire. So why am I expecting the daily to go there? My weekly is right at a hook and a cross. Everybody see it? Hook and a cross. So I'm expecting this daily to grunt and grind its way down to this area, probably to the EMAs I'd love to see. And we come down here. So how do I want to set it? Just real briefly, I know I'm taking time, but it's so exciting to show it. Set your take profit, stop loss, and I just come in here and say, I want to buy a trigger long. That's it. I want this thing to finish down here and buy it because I expect the euro is going to bounce and then go up a big way. And remember, our target's way up at 140, 145 years down the road, thousands of pips. But I'm looking to buy this next cycle up based on a weekly hook and a cross down. I want it to finish. Then I buy, and I set that to true, say okay, and then how hard is it to set it? Click a trade, boom, done. Now I've been having this in the ready to trade mode for days and days and days, and this thing will stay in ready to trade mode as long as you leave your platform running until we get to this criteria where we get oversold. Notice we don't have trigger here. Money flow didn't get down there. We call that money flow. How much flow of money is going in or out of the markets? So that we did get close. We did get here, but no cigar. We need this guy to head lower to get oversold. When they all get oversold, both trend momentum PI oversold, you get a trigger. When they're oversold, you get a trigger. They're oversold, you get a trigger. Get the point. When they're not oversold, you don't get triggered. Well, we'd be buying slingshots in that may or lower time frame. Another thing with a slingshot, that's this. It's how does this form? It's my 4 hour going from overbought to oversold. then move it from oversold to overbought. So if I want to buy this expecting it to do it, what do? I set the trigger to buy on a 4-hour time frame. And then boom, it'll buy that. And I'll tell you when that's doing and when it's possible and when it's likely that's a good time to set it up. But this, because of the weekly hook and cross, is likely coming down. It's ready to trade mode. So that's what we mean by you can set it in advance. So it'll take the trade when it meets the criteria. It could be days, weeks, months, could be hours, depending on what time frame I set it on. Or I can automatically manage my trade from entry to start. When I click ready to trade, I could click a buy and it'll pop on my take profit levels and I can move them up and down and it'll take my exits, fits any trading style, dual scanners for the next big trade. Like I showed you, we set these up and we set up massive thousands of pips if you trade Forex, hundreds, even thousands of dollars in crypto, you name it. And we work on, depending on if you're MetaTrader, 800 plus symbols, and that's changing more and more, even throwing in crypto on a lot of these MetaTrader platforms. And one thing I haven't mentioned, it is available in NinjaTrader 8. NinjaTrader 8 is also available. So consistently delivers low risk, high reward, high probability trade. So what do you got going for us? Premium Edition 5 trade. Our annual subscription is normally $49.97. I'm willing to give you a $2,000 discount today. So if you want to sign up for that one, you'll use that. And I just posted the link for you for those who want to sign up to annual. I'm going to encourage you to do the annual. Oh, it's more money. Yeah, it is. But it costs less money than a monthly, month after month. So you save a huge savings on that, over $500 plus than simply going month to month. Why would I want you committed for a year? Because that's going to take us through that crypto bull run. And I want to be there to guide you as we just make a lot of profits in the coming 12 to 18 months. So that's the one for that. I'll go a step further. If after the first year you haven't at least doubled your investment, so if you haven't made 3,000 times 2, $6,000 in profits by the end of your first year, I'll gladly give you a second year free of charge. I want to stand behind what we offer. And I think our trade management system is superior to anything else out there. I think our software is superior. And even if you don't, we have members that, believe it or not, they only trade based on my projections and don't use the software trade manager. It's up to you. But I have members that have been with us for over 10 years that only trade based on my market anticipated move. One thing you won't hear me say, I don't do predictions. Everybody predicts everything, the weather, this, that, and the other, outcome of elections, they predict. That's for the profits. I anticipate and I expect things based on those hook and crosses and my Fibonacci's and my ability to reinterpret price. So how about that a deal? First year, double your investment, you get a second year free, and we're giving you a $2,000 discount just to get started. So this is less than a few $100 a month, and we're willing to throw in a $3,000 gift if we don't back up what we say you can do. There you go. Then we're going to offer a monthly. You get the same service, you get the same software. Normally we offer a special for $399. I'm willing to knock 102 off of that one to $297. But I really would prefer you do this, because what I plan on doing for all our annual members is I'm going to do a master class. Let's get started and show you how to set up your charts, how to set up these trades and all of these ones we talked about. I just barely mentioned a few. I was going to go back and throw in a little bit more spice. One of the crypto miners I am very high on. I own a lot of shares of their stock, and I'm looking for massive moves higher. I keep passing it, is Mara, M-A-R-A. I told our crew to buy at these lows, and then most recently when it got to these lows, and this year after the crypto run in the pullback, we were talking about it's time to buy in the $8 to $10 range. You need to get in. And I even told them it was going to run up into the 20s, maybe 30, come back to the teens before we truly break out. Well, you want to see what my targets are for this? Look at the high to the low. This is what's interesting. Last crypto bull run, we came down to what? Look at Mara. The last crypto bull run, we got a low right around these 39 cents, right around 38, 39 cents. After the 12 to 18 months, this baby went up to $83. 30 cents, 30 plus cents to 83 bucks. That happens to be, you don't see it on the chart, but that happens to be a 21,000% gain. Hello. So what if, ladies and gentlemen, this, now that we're the post-halving again, we're about to get into crypto bull run between what? April, May of next year until maybe September, October of 25. So the next 12 to 18 months, look at, if we just do the same thing, we should be at about 500 bucks. And I can get in at 15 bucks. Oh, if you were in the service earlier, you've been getting at 8, 9 bucks, if not down here at $4 and $5. Depends when you join the service. But I'm looking for this thing to go ripping. What is my conservative target? Conservative. Up here at 105, 130. And I can get in at 15. What if Bitcoin goes to 300,000? It's going to be interesting to see, but we could maybe go to the 180, 200 range, maybe even the 2 to 300 range. And if it has the mitigated gall and nerve to do another one like it did before, it should be up here in the $600, 500 plus range. And what's different about this crypto halving? We got those ETFs we've never had before. Interesting. So this is another freebie we're giving right there. This is a great one to buy options on. I'd go way out into 2026, give it plenty of time, and then buy shares. I have both, lots of shares. So with that, just to remind you once again, we will be sending out a recording. So if you need to see this again, but the annual is the 2997, the first link, and the second link is 297. And let me finish up with my last slides because we made it special for you. Is that we want to thank you for attending the webinar, and we look forward to you joining us. Remember, the market price anticipator software, it'll empower you to read and anticipate price in any financial market, including crypto now, on time, in time, all the time. So with that, I'll say thank you for your time and attention. And if you by chance have any questions that weren't answered, recommend you send us an email at support@gpatrading.com. So with that, y'all have a great day. And we hope to see you in our service starting next week, as we got a lot of trading going on. Take care and God bless you.